Greetings, everybody. This is Jeff Scott, and this is my weekend review. Will be posted probably on Sunday, which is the 3rd, or late night on the 2nd. Happy New Year's to everybody. I entitled today, Will the Bulls Be Happy in the New Year? And my email address, as you can see here, is hgsi.gmail.com, and let's get going. First time using this new machine. Someday I'm going to get over my affliction of having to buy every new computer I see. Let's go. As always, for educational purposes only, and any recommendations are in the spirit of education and not investment advice. I am a physician, not a broker. I am independent. I have paid for the tools that I use. Trading involves risk. You and you alone are solely responsible for any investment decisions you make. If you decide to follow any of the option trades that I do, I strongly suggest you get educated in options. The Options Industry Council at their website has some great educational tools, and there are a lot of people out there that can teach you how to use options and use them at your own risk. As always, I call my style of trading be your own guru, and all I mean by that is find smart people, learn from those smart people, and then put together what works for you. And what works for me doesn't have to work for you, and vice versa. I learned CanSlim to start from O'Neill, improved, I believe, by Morales and Catcher. Ian Woodward really taught me how to put CanSlim to use and work with George and others at Hgsi to create a software tool that allows us to do a lot of things much quicker than the web on our computer. John Person, author, educator, software developer, money manager, friend of mine, really taught me how to take a list of stocks and how to trade them. Van Tharp, position size money management. Sagar here with some great Q tools and other things that I use day to day. Roy Kelly with a number of interesting tools. And then my buddy George Lee, who passed away this past year, just a great trader who I got to share the podium with. And then, like many of you, I've been to the Mark Minervini's meeting. And, I put all this together, and what I do doesn't look like any of theirs. Doesn't need to. What I do works for me, and it's the hodgepodge of tools that I've put together that help me make good money in the market. I own way too much software. I even say that with my wife listening. I wish I used everything I bought, but sometimes you got to buy things to realize they don't work for you. Within TradeStation and Thinkorswim, I've got a number of indicator sets that are I use daily. Hgsi and EdgeRater I use daily. And then just some of the indicator sets, John Person stuff, Dr. K's tools, and Sagar's Q tools. Now, occasionally I'll mention a deal or something out there, and I'm never paid if you buy something, and that's important. I don't care if it's Hgsi, I don't care if it's a product that I use, and anytime they offer me a discount, I just say give it to you. So for example, Dr. K, if you reference that you heard it on my video and you're buying something new, will give you an incremental discount, and you can reach out to me if you have a question. I get nothing. I'm an unpaid volunteer, and this is purely education. Here's the website for highgrowthstock.com, which is the software tool that I'll be using today, in addition to others. They give a free 30-day trial, not even requiring that you give them your credit card. And under investing strategies, you'll find thousands of movies, or thousands, at least hundreds of movies by Ron Brown and myself, probably over 1,000 if he hasn't taken them off. Stock patterns are cyclical. Where are we? Big cap tech certainly felt like it's been rolling over, although it never seems to drop much before it spikes up with another leg. The Russell, which was the laggard, has just come up with a huge run, but it limped into the end of the week. I think at best we're in stage 3 still with uncertainty, where this market could still go higher. It's certainly not showing that it's done. But we know there's a lot of cracks and a lot of sentiment out there that's probably too far that the market's going to need to pause to refresh. Since uncertainty is there, that means I've raised some cash. Plus, I got a tax bill, a massive bill to pay in the next couple of weeks, which means I will ultimately have smaller positions. And I've also sold premium over the last couple of weeks against some of my existing positions. Now, you might wonder, why would I do that? Well, take a look at a stock like PDD or APPS. And as I sensed the market character was changing, I sold some calls against some of those positions. And I look at what's happened now, and the price value hasn't changed much of the portfolio, yet what I lost in the calls I was holding were replaced by the profits in the calls that I sold. Now, you may say, well, Jeff, you just should have sold them. And that's true, and I thought about that, but I really wanted to push some of my profits into 2021. I'm certain I'm not the only person doing that, and therefore I think we could have some wild days ahead of us as people try and take profits. Now, front running that and knowing some of my big gainers like APPS that I'm going to take profits on tomorrow or Tuesday, I bought puts on them probably 4 trading days ago, puts at a high price, at the money at the time, and they've come off since those puts, and that made me feel comfortable that I wasn't going to be left holding a bag of stocks worth a lot less. Now, of course, you never want to use life insurance, you never want to use health insurance, you never want to use disability, but you pay for them with expensive premiums, and I paid premiums on those puts to insure my portfolio. If you look at how the market ended on Friday, and this is just a sheet that's active all the time. In fact, if I was to pull up TradeStation, you would see real time. Let me go to this sheet here. And what it's showing me is the indexes and then some of the futures that I might be interested in following or trading, some major sector ETFs, and then each of the major sectors, materials, energy, financials, industrials, staples, and so on and so forth. I track the stocks that make up the sector, and then I am able to see real time what's working and what's not working in the market. Now, I changed my resolution. There's the rest of them. So if I just go by net change, for example, and now I want to look through here, I could see materials were mostly green. Energy was mostly red. Financials was almost all green. Industrials almost all green. Staples, technology, all green. Discretionary 50-50, look at utilities showing strength, healthcare with strength, communications strong, real estate overall very strong, foreign ETFs not so strong. So that just gives me a sense during the day of what the market's doing, and it allows me perhaps to take advantage of that with certain trades. Major markets tell the story. What does that mean? That is what I like to look at in Thinkorswim on the major indexes. So let's take a look at that. Let me pull that up in here, and let me enlarge this. So what you're going to see, pretty much at any time I have my indexes up, you're going to see futures, E-minis, S&P futures, NQs, Nasdaq futures, YM, Dow futures, RTY, Russell futures, VIX futures, and dollar futures. And let's just enlarge this. Simple slides here without a lot of indicators, but a lot of lines. So I've been, never liked seeing that. All right, I'll exit anyways, and I'll reload it. No to all. All right. What I see here are, this is the year to date of the S&P futures. We ran up to here in February and sold off. Ran down to here March 23rd or abouts, and we have had a great recovery. We traded up to the fib retracement right here, and we've stalled. If you take a trend line and run that up here, we stalled. So we've been stalling here, except look what happened on Friday on the S&P futures. We broke out above the stalling area. Now, was that a head fake and we're going right back in a little bit of a bull trap? Wouldn't surprise me, especially if we see some selling this week and profit taking. But at the minimum, a very strong day on Friday in the S&P. And what this little balloon tells me here is that was the high of the year. And in the case of the S&P, it's the all-time high. If I look at the Nasdaq futures, again, the high of the year was set on Wednesday. I think we may have had a closing high on Friday, a beautiful run off the bottom. If I look at the Dow futures, same thing, beautiful run off the bottom, closing at an all-time high or just below an all-time intraday high on the close. Hard to be really bearish at all-time highs. The Russell, which had been the best performer of late, look at this ascent here, actually pulled back on Wednesday pretty hard. Slight recovery on Thursday and Friday, really ending Friday relatively flat after starting the day selling off. But over the last couple of months, certainly the strength of the market. If we look at the VIX and we're looking for signs of volatility, it's hard to find it. Now, if you're holding a lot of growth stocks, you probably felt plenty of volatility this week as growth sold off. But if you look at where the VIX is, it's sort of been where it's the lowest been since the market recovered, but it's still quite a bit higher than it was going into the market top in February. And lastly, the dollar, and a weak dollar, I think, has clearly fueled the Russell move. The dollar had almost a bullish engulfing pattern on Friday as the dollar had a reversal. Now, it also set the low of the year on Friday, and we'll have to see whether that was a one-day wonder or tells us that something is going on. If we look at the weekly charts here, you just see the runs that we've had, and look at the Russell here the last several months, almost vertical. Yeah, the others have done great, but this is going up like at an 80-degree angle, and this is going up at a 65 to 70-degree angle. So clearly the Russell has made up for some of its lagging. Now, if we look underneath the indexes, and this is something I look at daily, these are actually in TC2000, I look at rates. This is 10-year on the left, 30 years on the right. Notice we're in a channel heading up on both. And as we've been talking, 1 week we're down, 1 week we're up, but we're still in the channel. We drifted down this week, so when we look at the AD lines, we'll see that in the NYSE with some ETFs, you'll see the TLT actually turned up. If I look at AD lines, the Russell 2000, actually the price pulled back some this week, but AD lines, advanced decline lines, on both the Russell 2000 and 1000 are at all-time highs, and the indexes are either at all-time highs or just below it. Here's that NYSE AD line in white, all-time high. You see this here. This is your IWM, which has just gone crazy to catch up with the other ETFs. It weakened a little bit this week. Here in green and yellow, the spiders and the Qs had a good week. Not as much on the Nasdaq. And here the TLT, which has been selling off as interest rates have been rising, actually bumped a little bit this week. If you look at breadth, we're pretty extended still. Although, as I've said before, extended markets can certainly get more extended. These are stocks above the 200-day. We trickle down. We're in the 70% there. Stocks above the 40-day. So this is a faster moving one. Actually dropped a little bit more this week, but still about 70% of the stocks are above that. Both of those are at very high numbers. We're going back. Each of these is here's 1 year, 2 year, 3 year, 4, 5, 6, 7, 8, 9, 10, almost 11 years. And you have to go back about 8 years to find numbers to this elevation, especially on stocks above the 200-day SMA. You don't get to first in years things unless you're getting to a point of, in this case, extension. 3-month new high, new low. This is the shortest time, quickest one I have. And you can see this one actually popped out of the oversold area. No shocker. Now, I've been a little bit surprised that it hasn't corrected more. And I do think there's probably some stories to this extension that so many of the stocks that are way above their 200-day moving average are stocks that have doubled over the last couple of months, but are down still significantly on the year because of the February sell-off. Daily McClellan, I look for certain things. I look for extreme readings on the oscillator or the summation index. Don't see those. I look for divergences. Yeah, you sort of still see the S&P going higher, and the summation index has rolled over. We did not get higher highs on the oscillator despite higher highs here. So we've had divergence here forever. We still have it. If we look at the weekly, are we seeing a zero line reject here, which would be bullish? But time will tell. Other ways that I look at the status of the market, if you take the S&P 1500 and divide it up into, put your Bollinger Bands on every stock, and your first question you do is how many are above and below the midline of the Bollinger Bands? As you can see, 66% of the stocks in the S&P 1500 are in green here. So that tells me that you have a bullish market. And then I look at buckets, and there's 10 buckets if you take the 0 to 100 of the Bollinger Bands and breaking up into 10% buckets, and then one above and one below. And I looked always at the extensions. There's very few stocks below, and there's some above, but I'd expect to see it 25, 35 if the market was clearly going to roll over because it's extended. So I'd say bullish, but not overly on this. Hindenburg omens, you expect these to occur before major market pullbacks. There has not been a major market correction since probably the Depression that wasn't preceded by a Hindenburg omen. We haven't had no signals. I'm looking closer now because we're getting to new highs. Of interest, we were at 10 and 12% new highs on the Nasdaq, 52-week highs, and 10% new highs on the NYSE, but we've backed off a lot. So again, doesn't show me extreme extension here that would worry me. Market tone, we're looking at the Woody indicator, mostly green, but mixed bullish. So not overtly bullish, but still strong. Now, growth took the week off. Now, how can I prove that to you? In the right is a tool where I measured closing price on Friday the 25th and then closing price on Thursday the 31st. Obviously, the market was closed Friday. And then I looked at the 1 week performance from a number of groups. So the S&P 500 was actually up a teeny bit by this tool, 0.46 on the week. If I look at my holdings overall, they were down 0.13. As I said, I will say it was a relatively flat week for me. Interestingly, my new buys were up 2.7 or 0.9, depending on which list I looked at. And if you compare that to some of the standard growth lists, whether it's the MarketSmith 250, the IBD 50, or the Weekend Review, also known as 8585, you can see very modest declines there. So growth just didn't participate. It's not as if growth got clobbered. Here is one of my favorite reports, and I used the fundamentals from last Friday, which would have been, Thursday the 24th, not even Friday the 25th, which, dummy me, was Christmas. And what we do is we run an Edge Rater, a tool called the Warehouse Report. It gives me a sense of what's working in a given week. The y-axis here is plus or minus return in the market. The x-axis here is ERG. ERG is equal to EPS rank plus relative strength rank plus group rank. Each is 0 to 99, so 3 times 99 is 297. So the higher the rank to the right, the lower to the left. The other thing that I've learned is that there are not a lot of stocks in the top and bottom 3 deciles. So I don't even count those. So, but you can see that growth actually underperformed on the week, sort of repeating what I just told you. If we look at here, EPS rank, the higher the rank, the lower the return. Relative strength clearly didn't matter with some of the worst returns being in the high relative strength rank stocks. Can you say profit taking or tax gain harvesting perhaps on some of the long-term gains if there's fear that Congress may raise the long-term rates this year? And interestingly, the stocks that were distributing the prior week really outperformed. Stocks that were accumulating the Christmas shortened week actually got clobbered. So bad week for growth. Let's take a look at the whole year though. Whole year gives us an interesting picture as well. If we start on the left, that same exact picture, here I'm using the fundamentals that I took in the market on January 1st, 2020. And then I asked, based upon those fundamentals, could I have predicted the return in the market? So the first thing, ERG on January 1st didn't really impact. You were about the same across, but notice all these groups are positive. It was a very strong year. As when we get to the three here, these are all positive returns. Notice higher EPS rank on January 1st gave better returns on the year. We're not changing this every week or every day. I'm just looking at the return based upon what the earnings per share rank was. Now, high relative strength rank stocks did well, but so did junk off the bottom if you look at relative strength. In fact, some of the best relative strength was in the stocks that were lagging. And interestingly, some of the laggard groups going into the end of 2019, this is pre-COVID, actually outperformed. So that gives me information. And then I like just to see how did the market do. Started on the 2nd, ending the 31st. Again, January 1st would clearly be a holiday. QQJ is a new ETF that looks at the next 100 stocks in the Nasdaq. Turns out those kind of match up well with the high growth stock portfolio. And again, as we mentioned, the S&P, well, we'll start up here. If we look at the Nasdaq Composite, that will be one of the big leaders, and you can see it's up 42.58% on the year. We look at the S&P 500, it's up 15 and change. We look at the NYSE, was only up 4.4. To me, the biggest mover has been what happened in the last quarter or so with the Russell 2000. And the Russell, which was a laggard, ended up 17.58%. Now, I think that a lot of growth stock portfolios are going to look like the QQQJ, and that was still up 15%, but that's only looking at about 2 months worth of data. You could see what were laggards. Oil and gas, commodities were weak, down 25%. Woo, the dollar was down 7%. Utilities were down some, and the VIX ended up the year down 13.83. If we look at the sectors on the year using that same group performance tool, again, the left is Edge Reader, the right is a tool in Hgsi. You can see tech led up 40.56, discretionary 27. Energy was the big lagger, minus 37%. Interestingly, the big winners, no surprise, were FANG, Semiconductors, and the Nasdaq 100. If we look at sectors, I would say they're mixed or moderate. They're still green and yellow, but there's mostly yellow. And you've got some strength in financials and technology. If we look at what we call the top-down with Q, Q is Sagar's tools, or Q Edge tools. It's a way that I can monitor during the day what's going on in the market. So I'm just going to flip into the tool itself for a second. And it's a big spreadsheet. So during the day, I can see, and this will be the current day when the market opens on Monday. This will be 1 day back, 2 days back, and 5 days back. When we're on the weekend, both these say 1 day. But it tells me advancers versus decliners of the sectors, the industry groups, and the stock market. Down here, I can see that looking at 1 day, 2 day, 5, 10, and 30, that over a month the market was strong, but it weakened in the last day or two. And I think that had a lot to do with what was going on with end of year profit taking and resetting the portfolios. Now, I may want to go deeper during the day, and I could hit that button and I could actually pull up, hopefully we'll pull up, the sectors, and this will be real time during the day when the market's open, but the market's closed. And I could see that utilities over the last week really turned it around, and they've been horrible over the last year. But for the last 5 days, they've been leaders. That doesn't say good things for growth and rah, rah, rah the markets. That's clearly a conservative group. Communication, financials have moved up, real estate moved up. And you could see back on the bottom, and it's kind of like a ping pong ball bouncing low, high, low, high, low, high. Back low is energy. And I think energy, as much as anything else, is tied to the COVID economy. And when there's signs that COVID is going to be fought, that more people will be out and about, then the use of oil will go up. When people are flying, the aviation fuel will go up, and then energy is going to respond. But right now it's bouncing like a ping pong ball. Now, let's say I'm a top-down guy during the day. I could actually highlight utilities, communication, and financials and say, show me what are the top industry groups in those three sectors. And then I'm going to pop up here and let's rank these for strength. And I could see where some of the leaders were. And I'm just curious what stocks are in this. I don't know this group. It may turn out to be only one stock or two. But I can actually drill down to what the leading stocks are. That's the number 3 industry group on Friday. And we see Aes Energy coming up to the top. And this tells me it's undervalued as well. So Aes Energy might be interesting. So I love this tool from Sagar. Again, it's called Q-Edge. And Sagar's company, well, just sagarnandy.com or Superior Profit. You can look him up. The challenge here, just for full disclosure, is that it requires Thomson Reuters data. I wish we could run with Hgsi. Apparently there's some fields that Hgsi doesn't have. If you look at sector performance, you could see the weaklings, blue is 1 month, 2 weeks is green, and this orange is 1 week. So this week, discretionary and energy were weak, and over, you can see real estate joined it on the month, on the 2 weeks. Everything's up over the last month. Now, I mentioned FANG was up, and we can look down here over the 253 trading days this year. You could see, if I put my glasses on, I might be able to see it too, that the FANGs were up 166.2%. This is not FANG, it's sort of an extended FANG. We call the canaries. Priceline's now called booking. But I use this just to get a sense of my portfolio. Why? Because I own most of those in one portfolio or another, and they have been leaders in the market. And, if the canaries roll over, then I know that I'm going to need to be changing my portfolio. We need to know news and earnings dates. As I say in the lower right-hand corner, it's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. And you can see a list of some earnings coming up. Greenbrier, I actually own that one. That's a train manufacturer and servicer. They've been doing okay of late. Bed Bath & Beyond, Micron, who's just been on a tear, come up this week. And you can see for news, the big thing is you got some employment from ADP on Wednesday, and you got FOMC meeting minutes. Again, FOMC has been relatively simple. They keep saying the same thing. We're not raising. Don't know when we're raising. And they're going to let a little bit of inflation come into the economy. We shall see. We got a new Treasury head coming in, Janet Yellen, who obviously knows the Fed well, seeing that she was the prior Fed head. On Thursday, we got some initial claims, and then Friday, as John likes to call it, the monthly unemployment report, John Burson, with non-farm payrolls and others. So big, big news week. Market thoughts. The large cap indices set fresh intraday and closing highs the last week of the year. S&P was up 1.4, Dow was up 1.4, and the Nasdaq was up 0.7. The small cap Russell limped into the end of the week, down 1.5%. If we look at years to date, FNGU is a ETF of FANG stocks. You could see the performance, and to me, the biggest move was how the Russell was down about 40-45% as the market started to improve. growth led on the year, limped into the last week as we rotated into some of the laggards and potential COVID gone COVID vaccine winners, energy, casino, etc. I'm still expecting news. I'm not political, but there is a election in Georgia with 2 Senate seats with control of the Senate in the balance. We continue to see fighting between, no, I don't want to make it political, on the vaccine logistic rollout. New enhanced contagious strain of COVID is out there. Still here, lockdowns. I mean, in Florida, where it's the wild, wild west, where we're not locked down, we now have over a 20% positivity. They required us to drop below 5 to open it up, and they're just refusing to close it down. We actually have counties where people are not forced to wear masks. It's crazy. Stimulus funds hit this week. Maybe that'll stimulate some spending. We'll see if they go to 2,000. And then, hard to believe this is going to be an issue still, but I know there's going to be some controversy around the certification of the election, which is going to come up this week. I ended the year with a quiet week. My model trading portfolio, which is real money, I show it to you every week. Problem is, it's reset by Thinkorswim. So I just got to tell you, I finished up about 215% on the year. I started with 1.4 million basis after I paid my taxes on the 15th last year in my annuity, and I ended up in profits over $3 million. So that meant I had a 215% plus return. I took some profits at year end, and I plan on taking profits this week. I've covered the stocks that I want to take profit taking on with some puts. Why? Some concern we might see the market be volatile this week, which probably means the market's going to go higher, and my puts be like buying insurance that I don't have to use, which is fine. So I'm going to pause it for a second and restart TradeStation. All right. I just thought I want to make a comment. I feel like I'm cheating today because I've now gone to a tower that's an AMD as well. This is a crazy tower. I bought it on eBay, and it's the first time I'm using it, so it'll be interesting to see how the audio and video come out. The Ryzen 9, this is a 5950X. It's a crazy processor. It just blows away my i9 10th generation Intel 10 processors. I can't believe it, and it's relatively cheap comparatively. I run a lot of programs, as you could see on the bottom. For the most part, TradeStation has been much more stable on it. That was the first time it kicked off, probably because of the overhead of the recording, etc. So let's take a look at HGSI. I'm opening up Major Markets Plus. I've added things, so I've got 30 things in it. And I'm going to go to a top-down view, which is T1. And you could see I've sorted it by raw combo. And what it tells me is the strength was in the Dow Jones Industrial on Friday, the mid-caps, commodities, interestingly, the NYSE, the Nasdaq. But if I look at where the weakness was, Nasdaq Biotech, Russell, gold miners, IBD type stocks. If you've had a tough week, that's why you had a tough week. I sit on a couple of boards that I participate in one, and one's just outstanding. And a lot of the growth stock folks were complaining about why is the market up and their portfolio is down. It's because HGSI, IBD 50, MarketSmith 300 or 250, whatever it's called, they've had 300 stocks of late. Those stocks took it on the chin this week. Doesn't mean they're done. It just meant that you could, if you're in a group if you're concentrated in a group that does poorly, you do bad, even if the market's up. Now, you've also done well on the year if you're buying those stocks, but they do pull back from time to time. So I like to go here and go open up the S&P 500, which I don't know if they had to call it the pseudo S&P 500 because of copyright issues. Let's open that up and let's skinny this down. Oh yeah, and then I've got the other chart already open. All right, so very quickly, as I showed you, The S&P 500 had been struggling at the 127.2% retracement off the March lows. It broke above it, closed above it for the first time on Friday. This is a Wells Wilder PSAR. You know, am I bullish or bearish? It's hard to be bearish right now. You know, sentiment is too positive, the bullish sentiment. The dumb money, which is us, are too bullish, which usually doesn't end well. But at the same token, I need to show evidence of the market rolling over. My weekly bongo, which is a long-term buy-sell indicator that I helped develop, is still a buy. I'm off the high jump bar. We had a mobile breakout from a squeeze and a kahuna on Tuesday, I believe. It's hard to say anything, but extended markets got more extended, and this still looks strong. It had a high closed doji on Friday, which is one of my favorite patterns. It doesn't count. High closed dojis account when you've been in a downtrend and you're reversing, not when you're getting higher and higher. You notice these two bars here are the bullish follow-through day of Hgsi. Again, a bullish market tone. So that's the S&P, or the pseudo S&P 500. The Dow, which was strong on the week, also sticking its head above to all-time highs. And when you see price above the 17-day, 50-day, and 200-day, that is a bullish formation. Again, markets don't go up forever either, so at some point it's not going to go higher. But I don't see evidence of a market collapse. Nasdaq Composite. Nasdaq Composite sold off a little bit this week. Let me make this a little bit less stuff. But, you know, it peaked on Tuesday, sold off Wednesday and Thursday, although it had an up day on Thursday. Was it up? Closed higher than it opened. I think the Nasdaq was up just a teeny bit. Was it? Or was it? Up 0.14%. Yeah, that's a teeny bit. All the indexes came back at the last hour or two after the treasuries closed for the day. So the Nasdaq, again, still looks strong. And then the Russell, which has just been bonkers off the recently here in the October lows. Just a great move. Now, I like buying pullbacks and uptrends. And, you know, what I scour the stock market for is this pattern right here. And what I'm looking at here, and you know, this, how did I make $3 million in a $1 million account this year? It's finding this over and over and over again. I look for indexes, sectors, industry, stocks in an uptrend. I look for them to go sideways and pull back, get to the range of free parking, which is the 50, and then I look for momentum to come in. And I look for, we'll talk about mobile breakouts from a squeeze, kahunas, pocket pivots, and John Person buy signal. This was a great buy signal that came in on the Russell, and that came in on the 4th of November, and the Russell has been on fire ever since. If we go and we look within the Nasdaq, let's look at semiconductors. They have been stars of late and are still stars right off their highs. What a great move off the bottom on the semis. How good of a move. If I take the drawing tool or the arrow, I'll go to the simple drawing tool, and let's do this in gray. I'm just going to go to the low here, abouts. I'm going to take it up to the closing. And off the bottom, the semiconductors are up 125%. I mean, I'm good, but the reason I made that much money was I was in the right industry groups. So semiconductors, again, sideways move here, maybe go sideways a little longer before the next leg up. Biotech, another one. Biotech had a great buy signal here at the end of November, and Biotech had a nice run. Biotech gave up some the last couple of days. If we look at the IBD 50 managed ETF, Innovator IBD 50 Fund, kind of looks like the Russell and some of our portfolios selling off a little bit this week. If we look at the dollar, we should see it a little bit of a bounce on Friday, but still a down week closing in the middle of its week. If I look at the VIX, as I showed you earlier, I think the VIX fell out of HGSI. So what did I use? I put something else in there instead of the VIX. Yeah, it's just flat line. But if you look at the weekly, the VIX isn't doing anything. I think I'll probably put VXX in instead, because at least VXX, you can see it looks a lot like what the VIX is looking like in TradeStation. Gold. Now, if you're wondering why would it fall out of HGSI, my guess is the data vendor either lost access to it that supplies HGSI or is charging an arm and a leg. Gold actually bounced. Now, I thought gold was bottoming here, then it came back down. Is gold ready? I don't know, but I'm looking at the relative strength from the person market catcher getting stronger while gold is going sideways. Gold looks interesting here. It's not giving me a buy signal yet, but it looks interesting. Gold miners still struggling at their 200, but constructive. And then silver, it's already started its move. Now, once I've looked at the indexes to get a sense of my long or short, and again, I'm concerned that there's some volatility coming just because it's the beginning of the year. There'll be some reshaping of portfolios. Clearly, there'll be profit taking to pay the tax man, as I'm going to be doing. But the markets still look very positive. But, you know, whether it's time, whether it's these moves off the bottom, we're getting to a point where one would expect, and needs to be aware of, but not necessarily sell everything, that we're going to have volatility and corrections. If we go into number 7 in the Major Markets Plus, should be industry groups. And you can see here that we have 174 groups. Now, if I want to know how many groups have positive momentum, I look at 2-day force, and I see I've got 64 groups with 2-day force up. If I want to know how many have negative momentum, I look at 2-day force down, and I see only 20. Electrical power equipment, entertainment, commercial vehicles, precious metals, internet, auto, specialty pharma. Some of those are high growth stock groups, the power equipment, internet-based services, specialty pharma. So not all growth is working, and you can see that there. But more groups are positive, which is bullish. If I look at a 5-day down, a more intermediate look, 68 positive, and 5-day down is 26. So the market, and you can see Biotech is sitting there. The market's bullish, so let's look at the bullish ones. So what I do on a nightly basis is I will combine some bottoms-up scans and some top-down analysis. And I just lost my TradeStation again, so we're not going to go play a TradeStation today. It's been working ever since I set this computer up. Clearly, I've got too many things open right now, which is fine, and probably need to reboot. Let's go into renewable energy. So I'm highlighting it with my left button, then I'm hitting my right button on the mouse, changing to industry group, hitting the left mouse button, and I see a list of stocks. Now, all these stocks have positive force. The 2 with the highest force are up at the top, and I usually don't go far below the index, but we'll look at a couple of these. Enphase. Wow, this is like a textbook in itself. I've been long Enphase for a while. I've been long Enphase since it did what I like to see. This is where I got long Enphase, or at least one of the times I got long Enphase. I think I was already long it from earlier. But if I was looking at stocks to buy, This is my pattern. Let's look at this pattern. First, I'm going to blow it up. 1, 2, 3, 4, 5. Here is a stock that's in an uptrend. It's a gentle uptrend, but it's run from 48 to 70. And then we see a sort of a left side of the cup, right side of the cup. Really didn't form much of a handle. I guess this was the handle and a breakout. Now, that would have been a very reasonable buy point. It's not where I like buying it. I want to buy the stocks when we're starting to show momentum moving off of the 50. So you notice we have the 8-day exponential, we have the 17-day simple, and the 50-day simple, which almost are all the same price there, like that. No shocker, we have a Bollinger Band squeeze, which means the Bollinger Bands have tightened inside the Keltner channels. We have a David Elliott mobile breakout, like that. As I come down here, I see that this here was the chandelier sell, and we took it out over here, and now we got these green lines here, which says the chandelier is in buy mode. That's good. This here is a John Person buy signal. It was positive here a couple days earlier. Would have been a good time to buy then. And then this is a kahuna, which is a large percent B movement that I'm looking for momentum. So when I see significant momentum occurring at the site of a squeeze at a stock that's been basing, I'm all in. And Enphase was very good to me in 2020. You had additional kahunas the next 2 days. And did it really matter which day you bought in? Typically, I'll get my signal. I'm not in the market all day long. And I set a buy stop above the close of the prior day, and I got in the next day. Part of why I like this setup, besides it works for me all the time, is that my stop is not very far below. In fact, if I open up the trusty little reader here, this was September 25th, the close was at 73.62. It had about a 6% range that day. The chandelier stop is at 66. Now, I'm not sure that I would even leave my stop there. I'd probably put my stop the low of the prior day, and the low of the prior day was 67.53. So I would have put a buy stop, if I hadn't seen it during the day, of above 73.65 and a sell stop just below that doji. That is the trade I look for all day, every day. And pullbacks and uptrends, that should be on my tombstone when I die, because that's what I'm about, pullbacks and uptrends. That was a great trade, and you could see the return had you bought it the next day at the open. Or right in the middle of the day. You take it to where it closed on Friday, 129% return in 3 months trading. Great stock, and I still like it. Now, you look at it where it's at today, it's not the same kind of a buy area. This one had a more shallow pullback, but look at this, a mobile breakout from the squeeze, occurring off the 17-day with the pocket pivot and a kahuna and a new John Person buy signal. That's another buying opportunity. I don't see a great buying opportunity right here. It's run some. Maybe we'll get a little bit of a base. I guess if it takes out these 3 dots and breaks out again, you might chase, but I'm not a chaser. Just ask my wife. Now, what's driving this? I'm a big believer in earnings, and they had great earnings. Now, interestingly, they really stubbed their toes over the last couple of quarters. Perhaps it's the green wave coming to Congress. I don't play politics. I play chart patterns. The next one here, Sunrun. It's really going sideways here. Again, it's probably buyable here. Look at the weekly. It's pulled back hard. But wouldn't you rather have bought it back here? And you notice the exact same pattern. I've got my squeeze, I've got my mobile breakout, I'm in a person buy, and I got multiple kahunas in a row. That's when you buy something like this. Here, I want to let the right side of the cup set up some. Maybe it's a good buy, not what I'm looking at. Going down the list, I'm in plug power. Can you pick the day that I would have bought it? I would have bought it right here. I think that is the day I bought it, or the next day. Again, the same pattern over and over and over again. Pullbacks and uptrends. DQ, pretty hot right in here. Perhaps it's setting up. It's giving us a sideways move above the 17-day, not an active buy. Ballard Power. So I'm looking for setups right now that I'd be interested in buying. These are clearly have been leaders, are strong, but may not be in good buy points. Next one, Semiconductors. Here's Micron. Micron's earnings are coming out. Well, the problem with this one here, two big problems. Problem number one, earnings are coming out this week. Do you want to buy something pre-earnings? Maybe. You got growth rates greater than the multiple, which I like to see. You've got a mobile breakout from a squeeze with a new John Person buy signal, pocket pivots, and two kahunas. Like that a lot. What don't I like? It closed at, the high was at 75.68. The open was 71. Where am I going to put my stop? The chandelier is at 61. So 75 to 61 is $14. That's too much risk. So I'd have to put it in the middle of that bar. I don't know. I think there's too much risk. But it should be on my buy watch list. Intel, no. Qualcomm, much more interesting. Uptrend, sideways move, pulled into the 17-day. Here's the chandelier stop. I'd like to see a break above that because these things can go sideways for a while. Great earnings per share growth. I like Qualcomm. Cree, Texas Instruments, same story as Qualcomm. Going sideways is good. Mobile breakout from a squeeze. Maybe it's a buy right now. Earnings per share growth slowing down. Broadcom. So some of the semiconductors look interesting. Beverages, not my cup of tea, no pun intended. Don't know anything about Celsius Holdings. Had a Bible gap up on Friday, so you'd be chasing it. I kind of like this Bible gap up here. Yes, you could have bought it here, but I would not have bought it there. Now you're going, but Jeff, you're a contradiction. Why wouldn't you have bought it there? And the reason is it was going sideways for the last 3 months. There's no upward momentum. But I would have put it on a watch list, and I think the kahuna the next day would have been interesting. But even if you bought on this day after a Bible gap up, you would have had a nice return. I don't chase it here. Coca-Cola. Pepsico, not my kind of stocks. They pay about 3% dividends. Uptrend, sideways, breaking out. I could see why somebody would want to buy that. They're just not my kind of stocks. Consumer finance. This one I thought was interesting. Fundamentals are horrible. It was doing nothing forever. You haven't quite pulled back to the 50, but I got a mobile breakout from a squeeze. A new John Person buy signal and kahunas forming. Lending Club LC, it's probably on my buy watch list. MasterCard and Visa both look good. Breaking out here, probably have gone too much for my taste. As is Global Payments, FIS. Investment Management Index. I don't know anything about Ashford, it's beat up. Riot Blockchain. I'm in this late. I know my buddy TG's probably was in it back here. Here is the signal. Again, as I said before, it was sideways, so I wasn't jumping on it. But this should have gotten me interested, and I wasn't paying attention. A Bible gap up after a big base, and now a big run. I'm in it now, but I'm in it way too late. The later you get in, the more risk. BlackRock, if you got the money, it's a $700 plus stock, uptrend, sideways move, and what do you got? A squeeze, a person buy, a pocket pivot, and a kahuna. BlackRock looks like it wants to go higher, as does T. Rowe Price. Group number 6, e-commerce discretionary. I am in almost many of these. So PDD, Pindaloo, there was an entry here at about 155 last week, but a much better entry was back down here, closer to 80. Had a Bible gap up in here. It's extended. I have a position in it. It's extended. I've already written calls at the money because I think it's extended. What does that mean? It means that I put premium in my pocket, and the best case is I get taken away at $180 to buy the options again. Netflix, we talked about this last week. What do you think about that pattern? I'm curious if Market Smith called this, but it looks like a cup, a handle, and a breakout. Mobile breakout from a squeeze, person buy, pocket pivot, kahuna. And if you watched my video last week, you know I'm interested in this as an earnings play in the next 3 weeks. All right, I just looked at the clock and we're at almost an hour and I'm getting tired. So what I want to do is just show you my buy watch list and then look at my pullbacks that I saw that I'll be looking at and then say goodbye. I've made a lot of money this year because I've been at home. Next year, who knows if I'll be at home. I think I make money because these webinars force me to be honest with myself, and it forces me to maintain discipline. I will probably keep them going because I think I make more money when I do the webinars, but I'm getting tired, so we'll see. Notice the number of utilities that made my list. NextEra Energy, NEE, looks interesting to me. It pays a 5.9% dividend. It's clearly in an uptrend. It is pulled back to free parking at the 50-day moving average. Its earnings are out in 3 weeks, but it's a utility, and it's breaking above the chandelier out of a squeeze. I like NextEra Energy, and there's probably a good chance that I'll be buying some more. PSEG, another one, or PEG rather, coming out of a mobile breakout squeeze and a kahuna. I like to see it clear the chandelier. So there's some utilities that look interesting. Anthem is a managed care play, and you know, a move up at all will take out its chandelier stop. It's pulled back to the 50. I like that one as well. You can stop this if you want and take a look at the stocks that made my interest. There's your Micron, Nasdaq, the stock sideways move. The challenge with Nasdaq here, you know, let's just take a look at the weekly. It's done nothing since July. And is this the time it's going to take off? I don't know. But you put your stop close, you put a time stop and don't let it go sideways forever. But Nasdaq looks interesting here as well. If you want to take a flyer, take a look at Goodyear Tire and Rubber. It's been doing nothing, but is it breaking out here? Mobile breakout from a squeeze at the 50. Pocket pivots and kahunas. Pays a 1.5% dividends. Got some earnings coming in. Clearly an economic turnaround play, as is probably Arconic here. Whoops. And then NEO, which is an EV play, has pulled back to the 50, and then on Thursday gave me a buy signal with a kahuna, mobile breakout from a squeeze, a new person buy signal, and it did nothing on Friday, so that's still an active opportunity. So on that note, if you want to stop the video and see what I liked on my review, these are some of them. They're not warranted, nor do I promise you I'm going to buy any of them. What I will do is I will stick them into a watch list. This is Market Watch, and I'd pull up the buy watch. And I have here my vantage point indicator. I have market relativity, which is a buy-sell indicator, kahunas, HDs, LCDs, pocket pivots, Bible gap ups, and a number of other things, including Dr. K's. And I'll be looking for signs that these are moving. That's how I follow a long list. And lastly, let me just show you the stocks that made my pullbacks and uptrend list, since this is the list that usually makes me the most money. Pullback, ready to run. And there's quite a few of them. Mosaic, uptrend, sideways move at the 17, mobile breakout from a squeeze, person buy, pocket pivot, kahuna, like that one, already in it. Nasdaq, let's go alphabetical. So Abbott, it's been going sideways for too long. It has to clear the chandelier for me to be interested, but it's got the setup that I'm looking for. It pays a teeny dividend. APD pays a 1.9% dividend. It's pulled back too far. I like to be above the 50, but it's worth watching, especially when I see that the person market catcher, less negative is better than being more negative. Alcoa, aluminum play, high base, sort of a shallow saucer. Is it ready to break out? Mobile breakout from squeeze and a kahuna. Amaron is another one of the utilities. American Waterworks is a utility. Anthem, I showed you. Arconic is aircraft parts. Sideways move, setting up. Aventor is a medical device company. And uptrend, sideways, mobile breakout from a squeeze, new person indicator, pocket pivot, and kahuna. It's what I like to buy. Bausch & Lomb, similar pattern. Fortive is a electrical measurement company, horrible earnings growth, that bothers me. I'd make it clear the chandelier so you don't buy it, get faked in. Here's an IPO. I don't know anything about it. I just saw a pullback to the 50, a mobile breakout from a squeeze, a person buy in a kahuna. Here's Goodyear Tire. Here's Mosaic. I showed you already. Here's a Nasdaq. Here's Nextera. Here's NEO. PerkinElmer, this is a life sciences company. They're involved in genomics and a number of other testing. Massive uptrend, pullback to support with a buy signal on Friday. Great earnings per share growth. It has had a run. Prologis, they own warehouses, or a REIT. A lot of the big companies have warehouses, including the drug distributors that are involved in the vaccine. I'd have to clear the chandelier stop before I'd buy it. Pays a 2.3% dividend. Here's FPEG. Roper, old name, expensive stock. Only reason it showed up, sideways move after uptrend with a mobile breakout from a squeeze, in a person buy, a pocket pivot, and a kahuna. Service Corp, I love this. Don't know anything about the company. Its earnings are pretty good compared to its multiple. It's growing its revenue. Sideways move to the 50 and launch. Mobile breakout from a squeeze, pocket pivot, kahuna. The safe move will be let it clear the chandelier. Notice this gray line here. This is industry group. Shows you how strong the industry group is. Southern Company, it's another utility. Pull back to the 50, 4.1% dividend. Target, uptrend, sideways move, mobile breakout from a squeeze, off the 17. Pocket pivot, kahuna. It still is in a person sell. Maybe that's a concern. I showed you Texas Instrument already. And whoops, and I think we might be done. All right, we're at 1 minute, 1 hour and 4 minutes. I'm going to stop talking, say goodbye, trade safe, have a happy, 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 happy New Year, and talk to you in a week or two. Goodbye, everybody.